Good morning or good day. Today it's Tuesday, 4th of December 2018. Welcome to Real-Time Daily Trading Ideas, our global webinar series. We have 5 days a week, 5 different traders. We'll speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account to make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version there. If you are in the European Union, in the EU, you can also find some information about the topic of the year for all CFD traders of the year 2018, the different options for retail clients and professional clients. A picture shows more than 1,000 words. The margin requirements could be quite different. Margin requirements for DAX 30 and Euro dollar, 2 prominent examples, as you can see, quite different. If you are a professional trader and you like to get the professional client status, if you are eligible, you can apply for it online. Visit our webpage. Here you see the specific link. Retail clients still have a big benefit. It's called unlimited protection against negative balances. Professional clients don't get that via regulation. But some brokers and of course also Admiral Markets have an additional protection. We call it negative balance protection policy. Here you get also as a professional client and protection up to 50,000 British pounds, what is around about 70,000 euro. More details, like I said, on admiralmarkets.com, for example. This is me. My name is Jens. My English made in Germany. Admiral Markets is a big international Forex and CFD broker. So we have over 18 country offices, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, Jay's Day. Like today, on Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. On Friday, it's DAX Day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30, but also Euro dollar, 2 spread of just 0.8 points. And Euro dollar is a little bit outdated because since last week, even Euro dollar is a better spread, 0.6 pips. This is the actual one. Check it out on our webpage. So Euro dollar, this slide a little bit outdated since last week, 0.6 pips. Do the math. Check it out on admiralmarkets.com or compare with other brokers. I believe we are one of the best offers for Forex and CFD trading. Yeah, and if you'd like to check out what we are doing globally, we have an office in Chile, we have offices in European Union and also in Australia. If you'd like to see the different offers and options, just go to our webpage and you will find some information about that there. I don't have a slide also for Paul today, but now it's Paul's time. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, traders. Thank you for the introduction. Good morning, traders. I said it's here we are, Tuesday, the 4th of December. I have a little cold, so if I cough, I do apologise. But here we are, Tuesday, 4th of December. We've got actually a pretty busy week ahead, a pretty interesting week. Tomorrow, if you weren't aware, US stock markets will be closed because of, as a kind of mark of respect to the state funeral of the first George Bush president. So those stock markets will be closed. That'll be have an interesting implication on markets. I have a sneaking suspicion Mr. Trump might use it to make some sort of an announcement as well, him being one for high theatre and all that. So keep an eye on that. I'm sure that will have some implication there for us for the rest of the week, which then feeds into, we've got, I think, Canadian interest rate expectations, tomorrow interest rate decision, no sort of change expected. And then, of course, Friday, we have the big one, NFP, which will give us plenty to look at. But what I wanted to sort of have a start with is sort of the news that we've been seeing this morning. We've had Mr. Carney from the Bank of England talking this morning. He's been talking about how banks are ready for Brexit, etc., which, as always, has an implication. But hopefully you can probably see my charts there. And what we have here is this is a profile I've set up with British pound here, and what we've seen this morning is that the ECJ, the European Court of Justice, has come out and declared that the UK can unilaterally revoke Article 50 to leave the EU, and what that has done is given sterling a bit of a boost across the board this morning. And as I said, here's a UK GBP profile page. Okay, so I've got pound against dollar in the top, euro sterling, pound against Canadian dollar, pound against the Australian dollar, pound against the yen, pound against the Swiss franc, pound against the Kiwi dollar, and then the FTSE here in the bottom right. And you can see yourself, ladies and gentlemen, these are all on 15-minute charts, and we can see that we've had a real bump there. Okay, we saw what's that? A move of around about 120 pips there, just on pound, just on the cable alone. And what we'll be doing is waiting to see whether that was just simply a knee-jerk reaction and what actually comes out of it. So I'll be keeping an eye on this for the rest of the morning, just looking to see if there are any maybe double top setups or 1, 2, 3 setups that allow me to take maybe a very small aggressive scalp against that, because very often what we see is a bit of a knee-jerk reaction. And not unsurprisingly, where we've seen, sterling has strengthened across the board, that shouldn't be a surprise then for us to see the FTSE actually drop away, and that's what's happened. We've seen that drop from around about 7,080 back down towards around about the 7,020 zone there. So we've had a sort of a 60 tick drop there in the FTSE. So as I keep an eye, you can see that sterling has been the bottom of the pile overall in terms of strength and weakness. Those of you who know me, those of you who join us for the Monday afternoon Mastering the 4 M's of Trading webinar, I talk about within FX markets, I like to buy strength and sell weakness. Sterling has been predominantly weak for the last few weeks, mainly because of all these Brexit shenanigans that have been going on. So, for people who's looking at the kind of, let's say, the bigger picture, this little bump up, okay, this little bump in sterling might give them the opportunity to add to their shorts. Hence why, as I said, I'll just be looking on the lower time frames to see if I get any kind of short-term double tops or 1, 2, 3 patterns that may allow me a very short, tight trade. Now, of course, there's a knock-on to that, and we'll have, and actually what I wanted to talk about was, as I was watching all this, looking for a trade in the sterling, I actually missed a trade that was waiting for this morning. That happens to the best of us. That happens to the best of us traders, okay, with the best will in the world. When you're sort of digesting and watching news happening in one sort of instrument, you might actually get to miss another one. And I've basically been just watching the DAX. Here we go. I know DAX is a very popular instrument here for Admiral Markets traders. This is the daily chart. For those of you who are new to trading my charts, I have a blue 20 period moving average, a red 50 period moving average, and a green 200 period moving average. I'll have fractals on there, and then I'll also draw in significant levels of support and resistance and particular patterns that I see emerging. This on the daily chart here, I actually see this the sort of the bigger picture for me is that's looking up as a bit of a double top there, okay, sorry, double bottom there at the moment, a sort of a W formation there. And I was looking at maybe seeing how we reacted. I kind of liked sort of the press down here as a move north. But what we saw was, what we saw here is we can see that we have a gap here, okay, and pretty much most of the indices opening yesterday opened up on a gap. Why did that occur? Well, this weekend is gone. We've just had the G20 conference. I always talk to traders about being very, very careful about taking positions into sort of G8, G7, G8, G20 conferences, because you don't know what's going to actually sort of come about. You don't know what conversations are going on. You also have to remember there's lots of politicians there. The politicians, they want to make nice announcements at the end of the session to prove that they've actually done some work, that they've actually just, they've actually achieved something, that it looks good in the history books. So invariably, that happens, and that has a knock-on impact on markets. And so, of course, the big event from this weekend's G20 was the fact that Trump and President Xi of China, they sat down, I'm sure they had a very lovely dinner, and also talked about delaying the tariffs, thereby offsetting the sort of the trade war that has been hanging over markets for the last few weeks, maybe in the last month or two. That, of course, had a knock-on impact on equity indices, and that's what we saw. We saw, if you look across all of them, we had a bit of a gap there, and what we saw, if I go down to the 4-hour charts, okay, this is where we closed Friday, where we opened up on a Sunday, but as so far we hadn't actually closed that gap, but we had been moving down towards it. And I was watching there this morning as I go down to the 1-hour chart, watching to see, there might have been an opportunity here for us to sort of short to take the rest of the trade. What I was interested is when I saw the on the 1 hour chart, the price had pushed up. It hit this 11,437 level, which we've traded off in the past. Okay, we've traded off it in the past with some of our trades. It seems to be a significant level of support or resistance. We can see here on the 1 hour chart yesterday, it kind of bounced off. It bounced off it a couple of times before it fell through, and then we had, support becoming resistance. And I was waiting this down onto the time frames. Here I go down to the 30-minute. I was hoping we'd get this particular position setting up, and of course, just as that was setting up, I myself got distracted by the head news headlines coming out regarding the ECJ announcement and the UK and GBP, and I actually missed my specific entry to go short here. I wanted to be short around about 11,410, okay, and with stops above that at about 11,445, and invariably what we've seen, of course, is prices dropped nicely. 15-minute chart, okay, in the same way the 30-minute chart was bouncing off that 20-period moving average. I talk about it in the Mastering 4Ms webinar that we have, that the power of the 20-period moving average on the 15-minute chart on the DAX. We had it rallying up there. Okay, we also had it running into that 11,437 level with the 15-minute 50-period moving average. So I talk about how, as a trader, I'm looking for a confluence of events. I'm looking for 3 or 4 things all to come together at one time and place. And that's what gave us the trade, and that was our trade this morning. Unfortunately, it's I said I missed it, which is frustrating. But that welcome to trading, okay? Welcome to trading. Sometimes we, as much as we wanted to, we don't get the trade we have. But then I'd be looking for that to see, could that actually get down to sort of fill down around towards about that 11,325 level, okay? So I'll be interested to see how that comes down to actually fill the gap. See it fill the gap, and then actually what I'd be interested to do on a longer term basis is to see, would we get sort of a bullish reversal signals down towards that 11,320. So I've missed my little intraday trade, which is frustrating, but I'm actually going to be waiting to see, do we actually get sort of let's say bigger sort of bullish reversal patterns down towards that 11,320 once it's actually filled the gap down there on the 4-hour chart, what would be around about that 50-period moving average. So we'll just keep an eye on that for the moment. So with that in mind, let's have a little look at some of the other things that have been going on and how we can start to build some particular trade ideas. As always, okay, I want to have a little look at the dollar index as an FX trader. The weekly chart here we had here, okay, is that you've heard me talking about this, every week. We've been grinding north, okay, grinding our way north here, and getting up to those new annual highs there, up around about sort of 96, 97, and that's what we've been looking at. You can see it's been a couple of weeks back we had a bearish pin bar here. For me, that's not enough for me to go short. I tend to like to trade pin bars as pullbacks as part of the trend rather than as an end of the trend. But then what we had towards the end of last week, if I go down to the daily chart, ladies and gentlemen, what we've had is, we're on a weekly chart, we had a bearish pin bar, but on the daily chart, what we actually had here was a bit of a double top, okay, a double top forming here, an M formation. And what we also had there is, if you look there, we had what I would call a key day reversal. Okay, so for those of you new to trading, we talk about it. So it's one of the webinars in the archive of the Mastering the 4Ms. Is that a key day reversal, the price pushes to a new high, but actually reverses and falls away and closes beneath the low of the previous day's candle. It doesn't happen very often, doesn't happen anywhere near as often as we'd like, but when we do, and when it's part of a bigger sort of chart formation at a significant level of resistance, well, once again, I've got that confluence of events, okay? I've got a confluence of events coming together, okay? They give me an indication that actually, what we'd have been looking to be short dollar. And that has only been confirmed today so far, is that we actually have also had a break here of this sort of daily trend line here, okay? This daily trend line, and if we can break and hold beneath it today, okay, then I'd like to see us maybe come up and kiss the trend line goodbye before we roll over and fall away, and that would be, of course, an indication of dollar weakness. So I'm looking at that. Well, are we going to have dollar weakness for the remainder of the week, for the next few sessions? Is there anything I can use to help correlate that? Well, quickly, I can look at oil, I can look at gold, I can look at some of the other dollar pairs. If I look at, for example, sort of, euro dollar, which is practically the reverse of the dollar index. Well, here we are on the daily chart, and, and what do I have? What do I see here is that, yes, we've had this 113 level acting as significant support. I've talked about that in the past few weeks. We had a push beneath it, but we couldn't hold beneath it, and actually we came back above it. And then what we had was at the end of last week, well, what do we have here? Well, here we have a bullish key reversal candle, okay? In the same way we've just seen a bearish key reversal on the dollar index, here we have a bullish key reversal, okay, on the euro dollar around about that 113 level, okay? Today, what we can see is that we're just pushing up, okay? And what I'd like to do is I'd like to see us get above that daily 50, okay, at about 114.30, 114.40. I'd like to see us get above that, okay? Hold above that, okay, and then that would give me an indication of maybe a run towards about that 115.30 level. So we're getting a little bit of correlation there. We can see on dollar yen, okay, on the Japanese, the dollar against the Japanese yen. What we've had is today we've had a bit of a coil going on there, okay. We're getting coil going up there, sort of a scruffy triangle. It's a sort of things coiling up before we get to move. And what we've seen there on dollar yen is, of course, we've seen a lot of selling there, okay, a lot of money shifting into yen, shifting out of the dollar. Dollar Swiss franc is also showing us a little bit of interest, and what I'm kind of curious about here on the dollar Swiss franc is that once again we're getting a little bit of a squeeze going on here on the daily chart. I've been watching this in terms of we've had the 50 period moving average acting as dynamic support, and the 20 period moving average has curled over, it's turned down, it's drifting down. And now we're acting as dynamic resistance to the north, and what we're seeing is it getting squeezed, and I see as we're actually sort of falling down away there. So once again, we're getting indications of dollar weakness across the board. So I want to be keeping an eye on that. What that means is that that also has a look at one or two other instruments that are sometimes hold a bit of correlation with that. So one of them being gold. Okay, so if I go to the weekly chart, here we go. You've heard me talk around about that 1235 zone for the last couple of months. We've had a couple of trades in the past bouncing off it, and if we look at it down in the daily chart today, ladies and gentlemen, let me just zoom out a bit. We can see that we've bounced off there. I think when I was here 2 weeks ago, I thought there might be a coil sort of building. Okay, we're getting a triangle building. Things are coiling up, and hopefully you can see there. Okay, today, this morning, as we've seen dollar weakness hit the board, what we've seen is gold strength. Okay, come into the market there, and we can see that actually we're up above that sort of 1235, 1235 zone there at the moment for today. Now, of course, this is a daily chart, is yet to complete. So, I have, here's my options. If, this afternoon that session reverses and falls away and prints myself another sort of pin bar, another rejection candle, well, then I'd be, what do you think I'm going to do? I'm going to be looking to be, a short trader back down towards that daily 50 period moving average at around about the 1217 level. But if it gets up and holds above it, if it can actually hold above it, which if you look on the daily chart, it hasn't been able to do in the last couple of months. Every time it's got up there, it's not been able to hold above it. If we can get up there, then I'm going to be looking to see, is it going to come back and retest it, okay? Will it retest it? Will resistance become support? In which case, then, as a shorter term trader, I might be looking for long trades back up towards around about that 1250 level, which is where the daily 200 would be. So we're seeing, a little bit of a shift, okay? A shift out of dollar, we're seeing a shift into yen, we're seeing a shift into the gold at the moment. If I also look at oil as well, which I know we've got a few traders off, here we have, this is the 4-hour chart, okay, and that's been a beautiful trend, okay, and we've talked about that in the past. There's been a beautiful short trend there after the false breakout. But if I zoom in here, what we had is effectively, we've had towards the end of last week, okay, we had a bit of a basing pattern, nothing there, we had a little bit of a congestion there. I wouldn't exactly call that a particularly pleasant pattern. We might say that there was a double bottom there with a sort of a key reversal there on the 4-hourly candle. Okay, it pushed to new lows, but actually closed above the high of the previous candle. And then what we had was a gap up. Okay, and I was hoping to see we might come back down to around about that 52 level, maybe fill the gap, use the 20 period moving average as a dynamic support. That's what I'd like to see. But it turns out that actually, we're seeing a little bit of that shift towards already. That move is happening. So Personally, I'll be waiting to see, can we fill that gap and then use that as a springboard back up to 55? And that's what I'll be looking at. So, and that just basically fills with that bigger picture of dollar weakness, okay, bit of gold strength, bit of euro strength, okay, bit of Swiss franc strength, yen strength, and a little bit of oil strength. So there you go, Jens. I've sort of tried to fly through a fair few. If we have time for a question or two, I'll happily answer them if we have the time to go, Jens.
Well, a little bit more details about gold, if you like. Gold is one of the wishes of our live participants.
Yeah, of course we can go back to gold. So, so as I was saying there, it's I want to see it. I need to see it hold above that 1235 level. Okay, I need to see it hold. We can see it's acted as real sort of support and resistance here for most of the year. Okay, and what I need to see is it hold above there. If I go down into the short term time frames, clearly we've had strong pushes there this morning, as we've seen money flowing into yen, into Swiss, okay, into gold, into oil. We've seen that. So what I'll be saying is, again, the short-term trade I'll be looking for, okay, could we see, at the moment I'll be seeing, really I want to see price drift back down to that zone, okay? I want to see where here we have resistance, okay? I'd like to see us drift back down towards that area and then for it to act as dynamic support. And then, if we get nice bullish reversal patterns there, then I'll be looking for it to sort of make us a move and a step towards that daily 200 period moving average, which is around about that 1250 zone. Okay, that's what I'd be particularly looking at. I hope that helps people, Jens.
So thanks to Paul. Tomorrow is another day. We have 5 days a week, 5 different traders. If you'd like to see and watch that again from today, in a couple of hours later, it will be available on our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. And if you'd like to see and watch another day trader, tomorrow is your day. Greetings from Berlin office. All the time good trades. Again, thanks to Paul. Bye bye.